Well, new pre-budget polling from PwC reveals a surplus is possible within a decade, but only if the federal government takes strong action now. It's all about getting the balance right in next week's budget. One balance that Jim Chalmers will be very aware of. He needs to manage spending in growth areas like defence, healthcare, the NDIS, and ensure cost of living doesn't stoke inflation. Joining me live now is PwC's Chief Economist and Insights Officer, Amy Auster. Amy, great to see you. So what's PwC is showing about the budget and this modelling exactly?
So, Laura, what we've looked at in this modeling exercise is where is the budget now, where is the fiscal balance now, and what does that mean going forward? There are spending pressures in the budget, but what is quite amazing is that we are going to reach nearly a fiscal balance this financial year. We're expecting a very small fiscal deficit, less than half or around a half a percentage point of GDP. That's because revenue has been so much stronger than expected, than forecast, because of high commodity prices and because inflation has contributed to the tax take, and there is a slight underspend in the budget. So we're saying we're already quite close to balance, understanding that there are expenditure pressures going forward because of what has been promised and what has been put into appropriation bills. But if you can manage that expenditure and keep revenue at this level, you can reach a balanced budget within a decade.
Yeah, okay. It could even be much sooner than that because, as you say, this budget will be very close to being in surplus. Probably not quite get there. It'll be wafer thin either way. I'm not sure whether that really matters. But when it comes to, the spending side of things, as you say, we've got a few problems in the budget where there is a structural deficit.
There is what's called a structural deficit, and what that means is that there's expenditure beyond revenue, expenditure that has been promised. So it's in appropriation bills, it's been legislated. That's when we talk about, for example, the structure of Medicare, the structure of NDIS, the structure of other support payments, as well as important areas like defense. So expenditure that has been planned and in some cases legislated, that is considered future expenditure, but of course, the government of the day always has the right to shift those decisions, and that's what we find. Governments fund new commitments by saving money on what may have been promised in the past but is viewed as no longer necessary.
Yeah, the NDIS is talked about a lot, and we had that meeting of National Cabinet last week where all the premiers and the Prime Minister agreed to cap spending. The spending growth in the NDIS, I think it was down to 8% from what was projected at 13%. But is that the right way to go about things? I mean, that doesn't seem really like a sensible way to cap spending. Don't you need to look at something like the NDIS and say, okay, we're not just going to cap the growth in spending, but we actually need to look at what is cost effective and what is being spent in that area that is perhaps frivolous spending or overspends?
Yeah, you're absolutely right, Laura. And I don't think that 8% target is the end of the story by any means. So the review of the NDIS and the NDIA is ongoing within government, within the bureaucracy. And as that review unfolds, I'm sure it will be directed at and will end up with recommendations to improve how the NDIS functions, and that will save on costs over time. We know that there's been a lot more demand for the NDIS than what was originally envisioned. We know that there's some areas of expenditure that participants are saying is not necessary, and areas where prices have become overinflated. To tease out those issues and to solve them takes a bit of time. So I think this is, if you like, first cab off the rank to say we're aiming to cap the growth in expenditure, and the next step will be how do we actually do that?
Yeah, that's right. So what about defence and energy? I mean, can savings be made there, or is it all on the up?
Well, this is really interesting, I think, and it's a great question to ask. There's no question that there is need for government expenditure in this area, but we have to do it very carefully. We've just seen the headline about Snowy Hydro being delayed. And in terms of government expenditure, when we see government pour a lot of money into areas of growth for the economy, sometimes that just leads to higher prices without speeding up activity. So I think when we look at areas like energy especially and defense, areas where we're trying to build sovereign capability and position our economy for the future, we need to look beyond just budget expenditure. There's other levers that we need to pull. Government needs to look at how it procures. Government needs to look at how it contracts, how it works with the private sector, and look at all of the incentives that can be created. Jobs, skills, investment, how all of those are going to be delivering those capability together, not just the money that government might spend.
Look, the budget's been worked on for many months, indeed. Yesterday's interest rate rise was somewhat unexpected. It shocked the markets. Everyone from, except for pretty much Gareth Aird from Commonwealth, there was a few other non-bank that predicted that as well. But given most of the budget would be locked in, what do you think yesterday's rate hike will do to the budget, if anything?
I think immediately, in terms of the budget numbers, it's a bit late to shift now, but pretty tricky from a forecasting point of view. We get the RBA's statement on Friday that will give us its forecast for the economy. Really interesting to see where those forecasts for growth and inflation end up from the RBA on Friday, and then what we see from Treasury on Tuesday. We're at a turning point in the economy, so this is when forecasting becomes really pretty challenging. And the way in which those forecasts really feed into the budget is on the revenue side. So there's a lot happening with revenue. There's change in the rate of growth, change in the rate of inflation, and also some view that in this budget, the government might make a decision with Treasury to, if you like, lock in a higher level of commodity prices. In history, for a number of years now, Treasury's been using a forecast of $55 a ton for iron ore as the projected price of iron ore. That's why we seem to always have revenue surprising on the upside. So we're going to have a lot of movement in the budget on this on Tuesday.
Amy Auster, looking forward to talking to you again and the budget on Tuesday. Thanks so much.
Thanks, Laura.